So how did I get into real estate? I feel like I've been wanting to talk about this for quite some time, as I'm a tax strategist for real estate investors and business owners. I have a lot of my friends reaching out to me saying, Carlton, should I buy a house? Should I buy an investment property? Should I invest with you? What do I do, right? So I first wanted to talk about how I got myself into my first investment. And to be completely honest, I wasn't really prepared for my first investment. When I got into my first rental property that I own free and clear, I was coming out of college. I had $11,000 saved up in my bank account. So rich. But I knew that when I came out of college, I wanted to travel. I wanted to go see Europe. I wanted to go see Greece. And my mother wanted me to go invest in real estate because at the time she was a very prominent real estate investor. So what we did was we moved my $11,000 and coupled it with a little bit of my mother's money, and we were able to purchase my first duplex in Long Beach. So I was able to leverage a person to get into my first asset. Most people get into their first rental property with someone else because you are able to leverage OPM, other people's money. And two people coming together means that less people put up money. And when you have a little bit of less money into the deal, you're able to benefit greatly. That was how I got into my first real estate project. My second real estate project that I got into was real estate syndication, because shortly after acquiring a job and getting comfortable in a role, I knew that I wanted another stream of income. Real estate is expensive, as many of you know. It requires big down payments, sometimes as big as 20% if you're going commercial, and I wanted to go commercial. Part of the reason why I wanted to go to commercial real estate as opposed to staying in residential real estate is for the headaches. I work with so many real estate investors and I hear all the time about their tenants, talking to them about toilets and different issues that arise on the weekends that can really cut into family time and your free time. Personally, I didn't want that lifestyle for myself. I would rather purchase a big, gigantic, large-scale apartment building and maybe just have a property manager that manages that property for me, and I just earn income. That's what's called a passive investment, right? Where money is just being made without you really having to do a lot of work for it. Real estate syndication is under the regulation of a 506B, and it allows you to invest into a fund with other people as a limited partner. When you're a limited partner in the deal, your job is just simply to put up money. The general partner, who's also in the deal, is responsible for going and getting the property, negotiating the loan, and for making sure that that property gets upkept and managed. So in my case, being a young 25-year-old self-employed individual with maybe not a whole lot of money in the bank account, I wanted to make that money work for me, and I wanted it to work for me quickly. Real estate syndication was a way for me to get into real estate, earn an extra passive income that pays me every single month, and I was able to benefit because I didn't have to do the work and the upleg of maintaining a property. Not to mention, with real estate syndication, you can invest as a non-accredited investor. If you're aware, an accredited investor is typically someone who has a net worth of $1 million, or they made at least about $200,000 or almost $250,000 a year over the last 3 years. So for a lot of people, they don't fall into an accredited investor category. Real estate syndication is great because if you've ever wanted to get into real estate without the headaches and without a lot of money and without having to be an accredited investor, this would be the direct type of investment for you. Now, we all know that there's tons of different investments. There's fix and flip, there's wholesaling, buy and hold, syndications, there's Delaware statutory trust, opportunity zones. The most important thing when it comes to real estate investing is information. You want to have a better understanding of all the different types of vehicles of investing before you do it. And you want to know the tax benefits ahead of time, because that is one of the most beautiful parts about getting into rental real estate, is you get to save a lot of the money you earn every single month from your tenants based on the tax benefits you receive. Seeking out information allows you to become a very intelligent and very wise investor. So I urge you to schedule appointments with your wealth advisor and schedule appointments with your tax advisor, which means that you should have a tax advisor, someone who you're consulting with, someone who's aware about real estate and all the ins and outs and caveats and the tax codes for an investor so they can properly equip you before you get into your investment property. Hopefully this video has provided you with some value. I know that when I got into real estate, I wish someone would have told me point blank period, what did you do to get in there? Just be real with me. Be direct with me. And hopefully this video was direct. I wanted to give you a last comment. With the syndication, the very first syndication I did, I only put in $6,000 into that syndication. That syndication pays me monthly in upwards of about $26 a month. The beauty of that syndication is I will make that $6,000 back, and whenever that property gets sold, which should be in about 5 to 7 years, I should be able to benefit from some of the appreciation of the property when we split the proceeds. Hopefully you've enjoyed this video today, and I look forward to seeing you on the next one. Tune in to our Taxes Made Simple series, and I'll see you again. Cheers.